we should now be aware that our world is gonna be changed forever over the next 15 to 20 years. Think about the food on your plate, the pets in your household, the plants all around you, the cells in your brain and body, even the insects buzzing near you. Now in the future, all of this can be altered due to the up-and-coming genomics companies. We are now entering the stage of human trials, and now, surprisingly, this opens up a massive investment opportunity. Now this video will focus on where these developments are headed in the future, what trials already occurred, and which companies are the best to invest in. This is Stock Market Now. Before we continue, do make sure to subscribe to the channel and give this video a big thumbs up so that we can create more informational and educational videos for you to consume. With that said, let's get right into the video. Now the CEO and CIO of ARK Invest, Cathie Wood, has had a bunch of success when it comes to finding innovative companies. As a result, I will be going in depth of the top holdings of the ARK Genomic ETF or ARKG. First, we will be looking at the ARK Invest investing philosophy in the genomic space. Then we will be examining what each of their holding does and what they bring to the platform of DNA sequencing and genomics in general. The genomics development in this video will be very exciting even if you don't end up investing in these companies. With that being said, please consider subscribing if you haven't already, and let's get right into the video. Now before we begin, I just want to say a quick disclaimer. I am not a financial advisor, and as viewers, you must do your own due diligence and do your own research and ultimately make your own decisions. Today, we are simply examining and analyzing Cathie Wood's investment in this sector and not trying to give out any investment advice in particular. With that being said, let's get right into the video. Now, the investment philosophy of ARK Invest is truly unique in its form. ARK Invest is a firm believer in Wrights Law rather than the traditional regimen Moore's Law. Now, Moore's Law states that we can expect the speed and capability of our computers to increase every couple of years, and we will pay less for them. On the other hand, Wrights Law, which ARK Invest believes is more accurate, which implies that for every cumulative doubling of the units produced, costs fall by a constant percentage. Now, this law is essentially stating that with a higher scale deduction, the cost per unit will fall. Now, this doesn't imply that the cost will go to zero. Rather, the cost will decline dramatically. Now, Moore's Law has been inaccurate because it compared cost with a said time frame, which is very hard to measure against over extended periods of time. On the other hand, Wrights Law uses production volume, which is seen as a much more accurate variable. Now, this is what ARK Invest embodies in investment decisions, which is what they believe would drive innovation forward and also provide them with hitting investment opportunities. Now, in an article written by Sam Carus, it analyzed that ARK Invest states that Wrights Law correctly predicted the decline of auto production cost for over 100 years. This was proven when he showed the average price of a Model T. As the number of Model T units were produced, the cost declined on average about 15%. Now, this was also seen on the Tesla Model 3, which you can see in this graph right here. Now, unlike Moore's Law, which acquires innovation and demand, it has to be constantly increasing for 2 years. Wrights Law is much more feasible. They also believed that Wrights Law applies to many industries and that the genomics sector will be the next sector to demonstrate this. Now, if we take a look at this table, we can see that costs have dropped substantially. This is with the introduction of a new technology. In this case, it's Crispr technology. Furthermore, ARK Invest continues to see Wrights Law coming to play. This is because of the logarithmic-like growth of the genome sequencing market. And as Wrights Law states, as accumulated production doubles, cost will decrease in constant percentage. They believed that from 2.6 million genomes in 2019, we will see 105 million genomes sequenced in 2024. Now with the ARK Genomic Revolution ETF, Cathie Wood and ARK Invest would do their best to capture this market by investing in what they believe will be the dominant leaders in genomic sequencing. However, this will not be entirely genome stocks, as there are only a subcategory of DNA sequencing in general. Now, let's take a look at the top holdings of ARKG portfolio and what they do. Now, ARK Invest's largest holding in its genomic ETF is easily Pacific Biosciences. Now, Pacific Biosciences develops and manufactures gene sequencing systems. Their main technology system allows them to read gene sequencing at an extremely fast way and very accurately. This technology is called SMRT sequencing, or single molecule real-time sequencing. Now, what Pacific Biosciences is able to do is that when the primer is matching nucleotides with the existing DNA or RNA is moving through, a beam of light is emitted that scans the connection. The amount of light that is emitted shows what letter of the DNA is read. Now, just for a quick review, those letters are A, C, G, and T, or adenine, cytosine, guanine, and thymine. Now, these base pairs A, C, G, and T can be quickly read by Pacific Biosciences so that users can quickly and conveniently see the sequence of the DNA that is being read. Now, with such a large sector opening up, it's no surprise that Pacific Biosciences has competitors. Out of all the competitors out there, the largest one is Illumina. About 1 month ago, Cathie Wood exactly sold all of her stock to Illumina for a few main reasons. Illumina focuses on reading short DNA sequences, where Pacific Biosciences specializes in reading both short and long DNA sequences. Now, this is all done with a method named CCS. The principal research scientist from PacBio, Aaron Wenger, believes that Pacific CCS method matches the ability of short-read sequencing to detect small variants and structural variants. Wenger's words were truly backed up on PacBio was more accurate than Illumina and Oxford Nanopore. Now, this competition showed that PacBio was now the industry leader, and because of that, Cathie Wood believed that Pacific Biosciences is set to take the majority of market share in gene sequencing. Analysts estimate that the market for gene sequencing will grow at an average percentage of 11.7% every year over the next 7 years, which clearly shows that this sector will compound at a fast rate. ARK Invest believes that Pacific Biosciences will be at the forefront of this growing market. This stock is already up over 300% in the past year due to the fact that it's been taking market share from Illumina. Although the stock price is high, the company is expected to have its revenue grow to 75% in 2021. Now, in the long term, the company does have a lot of potential. Personally, I would only purchase the stock with the intent of holding it for 5 to 10 years, as then the status will become worth it. Now, Crispr Therapeutics is ARK Invest's second largest position in the ARK Genomics portfolio, and it's that large for a reason. In the simplest form, Crispr is a technology that is used to edit genes. Now, the technology searches for a specific portion of DNA inside the cell and alters that portion of the DNA. To simplify that, CRISPR allows you to edit your DNA, and that's not the only thing CRISPR can do. CRISPR technology has been developed to be able to turn genes on or off without altering people's DNA sequence. Now, before CRISPR was unveiled in 2012, editing animal and plant genomes was also possible. However, The process took many years and hundreds of thousands of dollars. CRISPR has revolutionized this by making genome editing cheap and easy to do. Now, as I mentioned earlier, this technology has not been transitioning to human trials. Now, one of these trials include sickle cell disease. Now, sickle cell disease is a group of disorders that affects hemoglobin, the molecule in red blood cells that delivers oxygen to cells throughout the body. Now, people with this disease have atypical hemoglobin molecules called hemoglobin S, which can distort red blood cells into a sickle or a crescent shape. Now, it affects over 1,000 people in the US. Now, CRISPR looked at and tackled this disease and has had actually successful human trials so far. In 2019, Victoria Gray became the first American patient to get treated for the sickle cell disease. The preliminary data has been fascinating. 4 months after receiving treatment, Gray already had 97.4% of her RBC containing the edited protein. Surely, it would take much more research after the initial trials, and CRISPR will be doing much more tests with a larger sample size with the same closed monitoring. Now, in addition to sickle cell disease, similar trials are taking place to treat other genetic disorders, such as cancer and impaired vision. From an investing perspective, CRISPR technology definitely has a lot of potential, but that potential comes with a lot of volatility. However, if you're in for the long term, CRISPR will be quite an appealing investment. Now, the approach of editing genes makes a lot of sense from a biological perspective. The market for gene editing is expected to grow 17% every year for the next 5 years, and CRISPR is set to become the leading innovator in this field. Now, CRISPR stock is at 155% in the past 12 months, and it's for a pretty good reason. Now, as a business, this company has grown exponentially with a ramp up of its technology. In fact, in 2021, CRISPR sales are expected to grow over 400%, which is definitely a significant amount. Now, Teledoc Health is a business that is greatly impacted in the pandemic. Many of you may have even tried Teledoc services during this time. Now, Teledoc is the first and largest provider of online doctor appointments. Without insurance, each Teledoc meeting costs $75 per visit. However, with insurance, every appointment can cost as low as $0 per visit, depending on your insurance benefits. Now, Teledoc's business goes beyond doctor's appointments. Now, in January 2020, Teledoc acquired InTouch Health, a company that provides telehealth solutions for hospitals. Now, the vision of Teledoc is to get into the entire telehealth market. This creates an enticing long-term investment opportunity. From 2020 to 2027, the telehealth market is expected to grow 15.1% every year. And because of that, it's no surprise that ARK Invest is invested in the leader of telehealth, which is Teledoc. Now, out of all the stocks in this list, Teledoc is definitely one of the stocks that isn't as highly valued. Now, the company is estimated to have a sales growth of 80% in 2021 and has a price to sales ratio of 17. Now, the company hasn't been able to make profits yet due to increased advertising, acquisition, and research and development expenses. Nevertheless, because Teledoc has a gross market consistently in between 30 to 40%, it is evidence that profitability is coming. However, Teledoc's management is definitely focused on growth over profits, which is a positive sign for a growth stock like Teledoc. Twist Biosciences is an extremely interesting company both from a biological and investment standpoint. Twist focuses on creating synthetic DNA and also known as DNA printing. Imagine being able to create DNA from the ground up with your own DNA sequence to DNA synthesis. Now, scientists will be able to discover new therapies at a low price, creating new self-fertilizing plants and generating more sustainable chemicals and biomaterials. In fact, Twist Biosciences was actually able to write instructions for creating corona tests and ended up sending those instructions to testing companies. Now, in 2020, the market for synthetic biology was estimated to be around 6.8 billion. By 2025, analysts estimate that this market will be worth $20 billion. Now, this is equivalent to an annual growth of 23.9% every year, which really is not something to overlook. Twist Biosciences will be at the forefront of this sector, but it will surely come at a cost. Twist is already up over 500% in the past year. So there you have it, the top 4 holdings of the ARKG portfolio. Now, what do you guys think? Let me know in the comments below, and I will see you guys in the next video. Peace. But before you go, make sure to subscribe to the channel and give this video a big thumbs up. This is Stock Market Now. We'll see you in the next video.